Hi there. My name is Victor Alui, and I'm the head of investment strategy at Sankore Global Investments. This is your weekly financial markets roundoff. We start off in the US, where the Dow ended Friday higher, wrapping up its 8th consecutive winning session and its best week in 2024. The Dow was up 0.32%. The S&P rose by 16 basis points, while the Nasdaq edged lower by 3 basis points. The major averages basically closed out last week on a high, with the Dow adding 2.16%, its fourth consecutive winning week, while the S&P and the Nasdaq were up 1.85 and 1.14% respectively, their third consecutive winning week. Cooler labor market data have proven somewhat helpful for market sentiment, particularly with the weekly jobless claims number coming in at 231K. That's the highest we've seen in about 9 months. This is coming on the heels of the weakest non-farm payroll job number that we had seen in about 5 months. 175,000 jobs created. This had created, some optimism, in the market for the better part of the last week. However, that optimism was kept in check after, consumer sentiment data released on Friday showed a significant uptick in inflation expectation. The University of Michigan reading for the preliminary consumer index sentiment came in at 67.4 against an estimate of 76. We also saw that, investors had been somewhat, more optimistic lately about the rate path of the Federal Reserve, particularly when the Fed hinted at the fact that its next rate move was unlikely, to be a hike. So this had created some positive sentiment in the markets all of last week, really. We, however, saw that, slow down on Friday, particularly with the release of the consumer sentiment data that came in significantly lower than expectation, and also created a huge increase in inflation expectations. On the earnings front, about 92% of S&P companies have reported their earnings, with about 78% of them beating earnings estimates. This is above the 5-year average of about 77%. So clearly, earnings this period has been quite strong and has proven to be a significant tailwind for the broader market, really. For the remainder of this week, quite some data coming through. We expect to see PPI data on Tuesday. CPI data should be out on Wednesday. Retail sales as well, and quite some Fed speak in the course of the week. A number of Fed officials are going to be speaking, while Chairman Jerome Powell will be speaking, having a discussion on Tuesday. So clearly, markets will be looking for some nuances, maybe some guidance in terms of what they say as regards the rate path, while, of course, that inflation number will prove really is likely to do from here on out. Over in the UK, the Bank of England held rates steady, basically, indicating that the path forward would largely be data dependent. I mean, we've got 2 inflation numbers as well as 2 labor market data that will be released before their next meeting on the 20th of June. So those data points would obviously prove very, very critical in determining what the BOE does, going from here on out. I mean, the governor had indicated that recent data had been encouraging, but that the BOE was not confident or convinced that they were at the point where they needed to start or should start cutting rates. Money markets are basically pricing in 825 basis points cuts in August and about 50 for this year. Also in the UK, the economy grew by 0.6% in the first quarter of 2024, essentially emerging from a recession. The economy has slipped into a shallow recession in the second half of 2023. This growth that we've seen in the first quarter of this year was largely led by a recovery in the UK service sector, which accounts for about 81% of the UK economy. Over in Nigeria, last week we saw the CBN float an OMO auction during the week, trying to sell about 500 billion. However, that auction was significantly undersubscribed, with the 1-year paper closing at 21.5%. There was also a primary market auction on Wednesday, where the DMO tried to sell about 179 billion. However, this auction was highly oversubscribed. We saw TB rates decline on average about 50 basis points during the week, as some field bids from the auction basically filtered into the secondary market. The trend in the bond market was largely the same as well, was very mixed. We saw a lot of demand still on the 33s, just in anticipation of the fact that the 34s were not going to be offered again. So this saw a lot of demand on the 33s. Wherever saw that demand sort of wane, towards the end of the week as, participants look to essentially position for the auction that is happening today. So there is a bond auction today. It will really be interesting to see where things close, particularly in the new 2033s, where it closes would really prove very significant in driving or determining market direction, at least in the near term. So we'll basically be keeping an eye out, for that. We've also seen, recent weakness in FX as well. We think it will prove crucial in determining where, these rates close at the bond auction. We'll also be expecting inflation data for Nigeria to come out this week as well. So quite some things to look out for going into this week on the local front. Obviously, the outcome of the bond auction, the inflation number. While on the international front, the CPI data in the US, PPI data in the US, retail sales, and also quite some Fed speak would largely determine what happens in the market, at least in the near to medium term. That's pretty much, the update for our market wrap up. We hope that you do have a very, very productive week. Thank you very much.